This episode is brought to you by FairDesk, a crypto derivatives trading platform founded by 6 former Binance execs and 3 former Morgan Stanley architects. FairDesk is a company focused on building a platform that enables traders to profit from both rising and falling markets. Sign up today and CB will credit you up to $600 in trading funds. For more information, visit fairdesk.com, link in the description below.
Do it live! I'll write it and we'll do it live!
Okay. Ready? Right.
Fucking thing sucks! We'll do it live.
Okay. Yes, ladies and gentlemen, we are doing it live. Welcome to another episode of My Two Satoshi. You're truly Crypto Blood. All right, ladies and gents, let's get it started. We got, oh boy. Let me scoot on over a little bit. Man, this weekend, Ready to Rumble, WWE. It was going down, ladies and gents. It was going down. Let me first do a roll call. Got to do that. Ken Smith is in the building. YouTube Premium member and Blood Analytics member. Wisdom Bar is in the building. Shout out to him. Thought is Energy. Shout out to you, my friend. Lick a shot for you. Cozy Babe, I guess. Sin City, that's all I gotta know. Shout out to you, my friend. We got Mud Hog in the building. Hex in the house. We got some Hexians in the house. Oh boy, you Hex people. Mr. Tequila said, here we go. CB going to tell you how it is with everything you don't want to. You already know it, baby. So look. Crazy weekend, and I'm going to break it down really quickly. I'm trying to keep this short because today is my daughter's birthday. All right, round of applause for little Blood Alita. I don't know how you want to say it, but it is what it is. So I won't be too long today. Hopefully, you know how I get when I hit that live button, ladies and gents. I get to going and can't stop. Energizer Bunny, but I'm gonna try to keep it brief if possible. But we're going to break down today what happened over the weekend. A lot of people, I hear a lot of narratives about what's going on and the banking system is about to collapse and all of this and that. Listen, none of that is happening, okay? None of that is happening. Listen, they will print to oblivion before the banking system collapse. Not going to happen. We'll go over what they decided to do, they actually created a new bank account institution. Crazy, I know. They move the goalposts, ladies and gents. They create things out of thin air. They write the rules on the fly. Listen, this is why I have to tell you guys, you can't rely on the regulators. Shout out to Sin City Crypto. I was on their show earlier today, and I was just explaining, look, we can't rely on the regulators. We can't depend on them to make the right decision for the crypto space. We are a threat. The crypto space is a threat. So you as an individual have to realize at some point, if you're a United States citizen, at some point, the line in the sand is going to be drawn. It's slowly, they're going over to the corner to get the stick right now. They will be drawing the line very soon. You see the formation in the chips falling where they are and how they're positioning. They're attacking crypto banks. We'll get into the details on that, which bank I'm talking about. This happened over the weekend, and an admittance by Mr. Frank Barney. Yeah, he admitted. He was on the board of Signature Bank. He admitted there's no reason for them to come in and shut us down. But we'll get into the details on that here shortly. First, make sure you guys jump on that stage, swing that right leg. You got to do the right leg around that thumbs up, and smack it. Please do me a favor and do that for me, please. Right now, we need your help. 41 people in the building, so I should at least have 41 thumbs up. Get over to bloodalytics.com. Get into the action. We are currently working out some an additional bug that I found this week. Didn't know it until the end of this week in regards to Ethereum and Binance coin. We got to get that signal synced up with FairDesk's price feed, because it's not. The chart I was using on TradingView is not accurately getting us in the trades and out of them, like they are, the pricing is on FairDesk. So I'm working on that. I got a meeting with FairDesk to see if there's something on their end, but I think I know what it is and actually fixed it on Ethereum, I believe. I'm doing a whole video on that probably tomorrow at this point. I've got all the information and reports done. Just need to do the video. So look out for that, Blood Analytics members. Bitcoin is synced in though. We locked and loaded with Bitcoin. Bitcoin did very well this week. So yeah, automated trading, sign up, link in the description below. If you sign up and deposit at least $1,000 with that link and send me your UID number, I will credit you or give you a promo code for 50% off the 6-month and 12-month subscriptions. So get to it, ladies and gents, get to it. FairDesk also has a spring contest futures trading going on. So check that out if you're interested. If you're already a member of or a user of FairDesk, you have your chance at $50,000 worth of prizes. First place gets a MacBook Pro. Second place gets an iPhone Pro 14. And AirPods are in the running. Whole bunch of prizes. So check it out. What I'll do right now, I'll drop this link in the chat room, so you guys can check that out if you like. Get more details on that and how to participate. Join me over at rumble.com. Rumble with me in the jungle, ladies and gents. Uncensored content. That's right. Uncut. And I like to say unraw. Follow me. 135 people of you are already following, so please go over there and follow CB on Rumble. Link is actually in the description of this video this time. I don't have to drop it in the chat room. So if you're watching this after the fact, you can definitely check me out by looking at the description of this video. Let's take a look at the cryptoslate.com website. Just a quick dashboard overview of what's going on here. We've got a market cap back above 1T. That is right, 1T. Mr. T is back in effect, ladies and gents. Volume over 105 billion in the last 24 hours. Bitcoin dominance is at 43.5. And we got Bitcoin up 13%, Ethereum up 7%. It's interesting to see Ethereum not make that move accordingly like Bitcoin did. That kind of tells you a little bit, right? Bitcoin is still king, ladies and gents. Bitcoin is still king. Bitcoin is up almost double in percentage-wise than the second biggest coin out there, Ethereum. So that tells you something, doesn't it? Litecoin up 11% today, though. That's what's up. Shout out to all my Litecoin family. Indeed. So there you have it on the overview of the markets. I'm definitely going to show you guys the charts here, but what do I have here? Yeah, follow me on YouTube too. I always forget to do this. Some of you are new, some of you watch me all the time and you're not following me, so please follow CB. All right, you can also join. See that join button? You can join and become a member, a premium member, where you get videos like interviews and extra content before I release it to the public. So check me out if you're interested in that. Let's take a look at this chart though. This is the chart, guys. We got to take a look at this. Is it a short squeeze? It doesn't look short squeeze. Like this part looks like a short squeeze. This part here, that doesn't look like a short squeeze to me. This doesn't look necessarily like a short squeeze. This is just people literally getting the news over the weekend that they're going to bail us out. They're going to save the banks. They're going to reward them for bad behavior. Almost. We'll get into the details on that. But this is more of a short squeeze right here. This price action right here is real short squeeze-ish. Right? The bulls wanted to, because we were stalling, as you guys can see here, we stalled here. It took a few hours to try to break through, and that breakthrough caused a real short squeeze there in the markets. So that second leg up to me was a very telltale sign of a short squeeze in the markets. And now guess where we are, ladies and gents? Back at that trend line, the blue one, and we have lost steam, just as we did down here. Seems like we're making the same pattern as we did down here at this pivotal level as well. We're at $24,000 Bitcoin roughly. I'm not convinced, guys. I'm slowly changing my narrative as far as maybe midterm, like the next 6 months. I think we may have a bottom forming if things go the way they could go, which is the scenario of the Fed stopping their interest rate hikes in the next 2 to 3 months. I don't think they're stopping next meeting. They're going to do another one, I believe. They've already telegraphed it. They try to telegraph things so that the markets don't, get caught off guard. So I think they're going to definitely bump it up another notch the next meeting. But after that, maybe one more, maybe two more. I'm thinking we may get a 50 basis point this next meeting. Jerome, G Unit, 50 Cent, Powell might do the 50 cent hike this coming meeting, ladies and gents. Just saying. Once we get that 50 out the way, I think they pause or do maybe another 25 and another 25, or maybe just one more 25 and then a pause. But I don't think we're going to get what they were going to do before what happened over the weekend, which again, they never see this shit coming. I'm sorry, excuse my French. They never see it. Janet Yellen didn't see anything coming. Bernanke didn't see anything coming. Jerome Powell, nothing. Didn't see any of this coming last week. Either they're lying to us or they're just oblivious. I'm going to go with the latter. I'm just be honest with you. I think these people are literally clueless. They have a whole bunch of titles behind their names. And they graduated from this and that. But at the end of the day, guess what? It's what do you want to call it? An echo chamber, a feedback loop of opinions. They don't go outside to see and hear anyone else's opinion that contradicts what they talk about, what they come up with, what mathematical statistical models they put together. They don't do it. So this is why they continually perform behind the 8 ball. They're always late. They're never on time, ever. So it is what it is, guys. But tomorrow, we got to watch out for tomorrow. Tomorrow is a big day. Because tomorrow, I'm just going to go ahead and scroll on to tomorrow, which is Tuesday, March 14th. We have CPI month to month, CPI year to year, and core CPI triple yammy, jammy, pammy on them tomorrow, ladies and gents. You got 3 numbers coming out at 8:30, and it's going to be fireworks. And you know what? You know what this smells like? You know what the rock is cooking, right? This is a perfect setup for a straight reversal of this move up in cryptos. Now, I'll get to stocks here in a second, because stocks did not perform well today, which is a telltale sign for you guys. I'm telling you. Stocks did not perform well today. They closed in the red, actually. They were up. Dow was up 150, closed down 90. So a 250-ish round trip swing in the markets. So that, to me, sets us up for disappointment tomorrow with the CPI numbers that are coming up. But again, watch out for that. There's going to be fireworks. And I really think the markets moved up this aggressively, in crypto at least. The equity market started to fade toward the end of the day, but I think that moved up to make a move back down in a classic pump and dump. Got a little ahead of ourselves there, in my opinion, with the whole bailout. Once we actually saw what was going on, it's really nothing major there. We'll get into that in a second. But, yeah, stocks down 90 points on the Dow Jones. Just almost down 1.5%, or 0.5%, I should say, on the S&P. NASDAQ did close in the green, but the VIX was also green, which means there is still worry in the markets. VIX up almost 7% today, ladies and gents. So here's a headline on CNBC's homepage. Something broke, but the Fed is still expected to go through with hikes. And I agree. I think they will. We also saw the dollar lose some steam today because guess what? All this bailout, it means more printing, ladies and gents. That means a slightly weaker dollar. Right? That's what it means. Until Europe starts printing, until some of these other countries that the Dixie basket is comprised of, until they start doing, which they will. This is why I think the dollar overall will become stronger as we go forward, because the other countries have to print, and them printing is different than us printing because we're the world reserve. So when we print, it doesn't have as big of an impact as when they print. So you will see the dollar move lower for sure off of this news, but eventually it will start to head higher, in my opinion. Nomura, yes, the bank out of Japan, calls for a rate hike cut next FOMC meeting and to end QT. So remember, I don't know if you guys recall this, but we are actually doing quantitative tightening right now. It's going on, month 3, I believe. So we are doing some buybacks of, I think, mortgage-backed securities and some other dickery. But yes, QT is going on, but Nomura thinks that they're going to stop the QT and also do a rate cut at the next FOMC meeting. I don't agree with them. I'm sorry. They've been hitting it pretty on point lately. Nomura has, but I have to disagree with them on this one. I don't think they're going to cut next meeting. But again, it's all predicated and dependent on tomorrow's numbers. Tomorrow's CPI numbers is probably the most important CPI report in years. So you guys definitely got to check out what's going on with that in the morning. Peter Schiff also, of course, got to chime in. Oh, Shift. Oh, Shift. I give Schiff a lot of flack. I do. I always rag on him, but low key, I like Peter Schiff. And you guys should actually listen to Peter Schiff's podcast he does. I mean, he hits that record button and it's just vomit of the mouth for like an hour and 20 minutes. But you definitely should watch him because he's a great, he knows what he's talking about. Of course, he hates and has been wrong on Bitcoin since I've been in Bitcoin. And it's been 10 years this month, guys. 10 years CB has been in crypto. He's been wrong, though. I've witnessed him because I used to follow him before I got into crypto. He's been wrong the whole way up, ladies and gents. But nonetheless, I think he's a great source of commentary for financial traditional markets. He's perpetually wrong on gold, but that's okay. That's okay. Gold one day will get its 10% move shine. But yeah, check out Peter Schiff. He does some good work. He really does. And they're attacking him, the government and regulators. They're actually going after him. He's got a lot of issues going on in Australia. Shout out to my people in Australia. I think I got a couple in the building right now. Shout out to you guys. But they're really trying to attack him. And he's actually having to sue them for defamation. So it's interesting that he's coming out. Peter Schiff is saying that, you know, his bank actually was closed because as a result of the regulators coming at him. And this is a recurring pattern that I'm seeing. I talk about that and I'm bringing this up in the documentary that I'm in. That's I think should be coming out later this year. Not should, it will be coming out later this year, mid to I think June, July-ish on Netflix. So I'll give you guys details on that. But I said that in the documentary. I said, look, the company that I was speaking about in the documentary, I said the only reason it failed is because the SEC came after it. It's a self-fulfilling prophecy. Like if you come after a company and say you're suing them for securities fraud and violation and all this stuff, of course it's going to tank. Of course they're going to, and you seize their money, of course they're going out of business. Of course. So it is what it is. But Peter Schiff said that the Federal Reserve essentially just launched QE Extra Lite. I like that term right there. On Sunday, the FDIC created what's called bridge banks to handle both insured and uninsured customer deposits. Banking regulators assured depositors that they would have full access to all of their funds. Now, I was asked this earlier on Sin City Crypto. Was this a good thing? Should they have bailed out the banks? I said most certainly. The depositors should not be in the crossfires. They should not. The equity holders, the stakeholders, yes, they should get their nuts clipped, and that's what's going to happen. So kudos to that situation, as they should. You're taking just horrible risks with people's money, and you know better. You should know better, at least. So I'm glad that they did this. Okay, it doesn't directly, if you want to say, I don't know, it doesn't really, it doesn't create moral hazard yet, I should say. Not yet. I think I can see a scenario where it does down the line, but at least as of right now, it is not going to create any moral hazard in regards to banks seeing that they've been bailed out, or at least the depositors have been, and then the banks, that is, going out and doing more reckless behavior because they think they're going to be bailed out. No, the stakeholders are not being bailed out. They're losing everything. So I don't think it's going to create moral hazard yet, but I think future actions by the feds probably will create more moral hazard. You could categorize this as quantitative easing extra light. Peter says this is not exactly QE. He goes on to say the Fed is not buying treasuries. It will hold them as collateral for loans, though. Once the loans are paid back, the treasury will go back on the bank's books. So it's not a straight quantitative easing. But he said it is like QE in the sense that the Fed will create money out of thin air to make these loans. That is inflationary, just like quantitative easing. Although the inflation is ostensibly temporary, when the bank pays back the loan, that money will drain out of the system. Of course, that assumes the loans actually get paid back. And so he goes on to say here how taxpayers would be on the hook, because currently they're not. And this is true. But he's saying the only way taxpayers would be directly implicated is if any of the banks taking loans defaults and Fed taps that $25 billion in credit protections extended by the U.S. Treasury. So I don't know if you guys knew what kind of went down over the weekend, but essentially the Fed and the Treasury clicked up and did a collaboration album together. Sort of like Jay-Z and the Pied Piper, Mr. R. Kelly. But they created, the Treasury created this program. Now you got the Feds creating their BTFP program or bank or whatever, and then you got the Treasury creating this other program. They do all this. They do this to obfuscate what the hell is really going on here, ladies and gents. It's a bunch of bull. Because ultimately, the taxpayer will pay, either directly or through inflation. And that, for sure, the latter is going to happen regardless. There's a guarantee on that. So, just kind of giving you guys some backdrop on that. Now, this was interesting. They're showing that the little banks are in trouble as well. There's a lot of issues going on with the regional and even smaller banks right now. And this is maybe why the Fed really stepped in aggressively. But I think they stepped in on one particular bank, which we will talk about here in a second, unnecessarily. So these banks here, First Republic Bank, Western Alliance Bank, and First Western Finance, are all showing the highest default risks right now on the Bloomberg terminal, as you guys can see there. So we do have a few kind of in trouble, cold red right now. But again, these are all pretty much small banks. And again, I don't see, people are blowing this up as far as this is a banking contagion. It's going out of. No, I don't think it's going to get out of control, guys. This is not '08 by a long shot. By far, this is not '08 at all, guys. We're not talking about trillions of mortgage-backed securities and so on and so forth. We're not talking about that. That is all over the banking system and all over the mortgage industry. No, these are isolated events that are contagious on paper, meaning like people will just panic just to panic, but there isn't any real contagion going on in the banking system, in my opinion. You're just seeing contagion by fear, right? Fear of losing your money. So people are running out and taking their money out of these various banks, but the actual banks don't have problems. So it's a self-fulfilling problem that's occurring here. And so that's why the Feds and Treasury had to step in to say they're going to back every depositor, and they're going to mark. They're not going to mark to market all these banks' assets and securities that they have on their bonds and stuff. They're not going to mark to market them. They're going to mark them to maturity. So that means they won't lose a single dollar on that bond, on that debt. So essentially, all the banks are good. They're Gucci, ladies and gents. It's not. We're not going to have this bank run. I know all these YouTubers out here getting that clickbait on, wanting you to fear, getting that fear porn going. Nah, it's not happening. Credit Suisse, CDSs are blowing out. Hits record high as Silicon Valley banking crisis spreads to Europe. Now, the shares of this troubled bank trading in Switzerland plunged as much as 15%, hitting a record low. This decline was due to concerns about the bank's ability to recapture client funds, revive its investment banking business, and manage ongoing legal and regulatory investigations. Yeah, they're having some big issues over there at Credit Suisse, but they were already in trouble. They're probably going to fail, if not get gulped up by a bigger bank. But I think it's on the wall. The writing's on the wall for Credit Suisse, and it has nothing to do strictly or directly with SVB. This is something that they've been going through well before SVB. All right, so this is probably only the nail in the coffin. It's only going to speed up their demise, but I don't think it is because of SBF or SVB, I should say. SBF, maybe. Sam Bank, maybe. He's causing everything. All the problems in the world, ladies and gents. So yeah, just wanted to give you guys a heads up on that. Regulators may still try to find a buyer for Silicon Valley Bank. So I thought that HSBC bought Silicon Valley Bank, but I was wrong. HSBC bought an arm of Silicon Valley Bank in the UK, which makes more sense. I'm like, why would they allow a Hong Kong Chinese bank to buy a US bank? That wouldn't happen. So yeah, that's not going on, but they're saying here that they may still try to find a buyer. I don't know who the hell would even entertain buying this at all. It's just a whole shit show over there. They really messed up big time. They should really go to jail, but we know that's not going to happen. That doesn't happen over here, ladies and gents. It happens in other countries. You make a mistake like that, you go to jail. I guarantee you won't make those types of frivolous activities and decisions in the future. So we need to start really sending these people to jail for making financial mistakes like this. but we're not going to do that. Our culture is just not that way, ladies and gents. We protect the rich class, the 1%ers. For whatever odd reason, we the people have the power. It's more of us than it is them. So I'm just saying, I don't understand why we allow such things. Crypto market rallies on FDIC banking intervention. USDC regains dollar play. So I don't know if you guys, I'm sure you did. I didn't do any videos over the weekend, but USDC dropped to like 89 cents on a dollar. It was getting real ugly there, ladies and gents, because Circle came out, I think Friday, and said they had a $3.2 billion exposure or hit to what was going on over at SVB. Now, again, that now has been wiped out. Like, they don't have that loss anymore because the Federal Reserve is coming in to protect all depositors. So, again, another example of the rich getting bailed out. So, it is what it is, but the market cap of all cryptocurrencies, again, is above 1 trillion, guys. And late Sunday night, we saw the rally on Bitcoin and many other altcoins as well. USDC, though, the market cap's number 2 stablecoin, regained its dollar peg, returning to the price of 99.3%, or I should say 99 cent on multiple price indices. USDC had plummeted all the way down to 87 cents. I thought it was 89. It went to 87. Okay, so they're good. Shouldn't be an issue anymore. So I wouldn't worry if you hold USDC at this juncture. Pretty much, you're good. Everyone's good. So don't panic in that regard. The sky is not falling. The sky is not falling. But you do have to watch these guys over here at the Fed and the Treasury, because they're doing a lot of trickery-dickery here, ladies and gents. As I told you earlier, Bank Term Funding Program is what they just created out of their ass. Okay, it's offering loans of up to 1 year in length to banks, savings associations, credit unions, and other eligible depository institutions pledging U.S. Treasuries, agency, debt, and mortgage-backed securities. Everybody except you and I, ladies and gents, gets the help they need. I put a tweet out last night. I'm going to go back and just show you this tweet really quickly, because it just dawned on me. It said we have $25 billion to bail out Silicon Valley Bank and billions more to Ukraine, but can't give a few billion to East Palestine. Not even to mention the neck of woods where I am, guys, north of me, about 45 minutes, Flint. I'm done. So it is it's a tragedy. It really is a tragedy, guys, that our government continually bails out other countries, institutions, industries, but not the people. It just does not make any sense. It makes no sense. But again, this new BTFP is in effect, guys. And again, it will, you also, with the BTFP, you also have the Treasury Department's program, okay, which is the $25 billion, and from there what they call ESF, Exchange Stabilization Fund. Okay. Now, if the BTFP, if they blow through that, the backstop is the Treasury at the $25 billion from that Exchange Stabilization Fund, ESF. So that's the ultimate backstop, and that's where the taxpayers directly will get involved in paying and bailing out institutions. And again, we're going to pay one way or the other. It doesn't really matter, because we're getting taxed through inflation. These are inflationary events. Printing money creates more money in the system, which creates higher prices, which is a tax on us because our wages don't grow. Yes, Tupac was definitely right. They got money for war but can't afford to feed the poor. Amen to that. My crypto space UK. Shout out to him. DCF said, yo, what do you call them, CB? The Punger squad doing the backstop? Yes, Pac was right, my friend, for sure, for sure. So I want to get to this one though. I put another tweet out earlier this morning, and I want to see what you guys have to say about this. Give me your best meaning of the new Federal Reserve BTFP, their new program. Let me know in the chat room. What does that stand for? We know what I coined what the SEC stands for. Steal every coin. We know that. I need to know what this new program from the Federal Reserve stands for. BTFP. Let me know in the chat room right now. I would love to hear your creativeness on that one. Why regulator sees Signature Bank in third biggest bank failure in the U.S. history. Now, we're to the main topic for today, and it is about Signature Bank because it went under over the weekend, forced under. This is not alleged news. This is coming from the horse's mouth. Signature Bank's board member, Barney Frank, or I should say, yeah, Barney Frank, which is part of the Frank-Dodd Act that was enacted years and years ago. He was a former congressman. I don't know if you guys know him. But yeah, he came out and slipped. I don't know if he meant to say that or what, but he said it. He said it, ladies and gents. I'm going to get to what he said here in a second. On Friday, Signature Bank customers spooked by the sudden collapse of Silicon Valley Bank withdrew more than $10 billion in deposits, and a board member told CNBC. The run on deposits quickly led to the third largest bank failure in U.S. history. Now, the second was SVB. All right. Regulators announced late Sunday that Signature was being taken over to protect its depositors and the stability of the U.S. financial system. Is that right? Now, I wonder how big this bank actually is, because I'm sure Signature Bank wasn't going to interrupt or destabilize the U.S. banking system. It's nonsense. Now, I will say this. Kraken did step away from Signature Bank about 15 days ago. I don't know if you guys remember this. I did cover it. Kraken steps away from Signature Bank due to transfer limitations. So they begin to basically say, hey, we're not dealing with anyone under 100,000 in SWIFT transactions. This is what Signature Bank said last month. The Kraken spokesperson said that the exchange maintains a number of different funding methods to ensure clients can deposit and withdraw their accounts. Now, remember, Kraken is creating their own bank very soon. So that's a good piece of news. Glad to see that happening. But Kraken reportedly told customers that this decision was influenced by recent changes executives executed at Signature. It isn't clear yet which banking partner will replace Signature. So, yeah. So some things were going on well before we saw the collapse, quote unquote collapse of Signature Bank. I say quote unquote because they were Gucci. According to Frankie Frank, they were fine. And I'm going to get to exactly what he said here in a second. I'm going to scroll down and show you exactly what he said, which just blew my mind. I couldn't believe he said this. But as waves of concern spread late last week, Signature customers moved deposits to bigger banks, including JP Morgan and Citigroup. According to Barney Frank, Signature executives explored all avenues to shore up its situation, including finding more capital, engaging interest from potential acquirers. The deposit exodus had slowed by Sunday. So what they were doing was working. Okay? And executives believed they had stabilized the situation. This is going to get you here. Let me quote what he said here at the bottom. He said, I quote, "I think part of what happened was that regulators wanted to send a very strong anti-crypto message." He said, "We became the poster boy because there was no insolvency based on the fundamentals." So this is not conspiracy theory, ladies and gentlemen. This is conspiracy fact. Signature Bank, out of the mouth of the board member, one of the board members, they were fine. They had fixed the situation. Now I can only imagine there are other banks out there that were like Signature, running around last week trying to shore up things. And the FDIC didn't come in and take them. Didn't put them into receivership. So they used this opportunity to yet again get that jab to the crypto industry. And it will definitely make it harder for crypto companies to operate in the United States, guys. This is by design for sure. It won't stop crypto, though. It will not stop crypto at all. But I think in the next 5 years, you will see a line drawn in the sand where you will have to pick, do I want to break the laws that they create? Do I want to break the law, or do I want to not? Do I want to use crypto, or do I not? And I think it's getting to that point. It will be getting to that point very soon. So you have to ask that question and make that decision for yourselves. Are you really about the crypto life or not? That's up to you to decide. But hey, I think it's going to be a very, very bad environment for crypto here in the United States, because they are going to try to keep all of us out of spreading the wealth, making it more equitable, and basically leveling the playing field. Tony C said he's a crypto outlaw. My G. That's what I'm talking about. Sin City said Barney, Frank, trolls, Democrats. That's hilarious. That's hilarious. Oh, man. Binance Treasury Fraud Department. Shout out to Sin City. Just on their show. Go check that live stream out. We did about 2 or 3 hours ago. Definitely check those guys out. Love going on their shows. I'm going to have to get one of them on and off the chain. Possibly this coming weekend. I'll hit those guys up in a little while. But hey, that's pretty much it, guys. Make sure you like, share, and subscribe, and click that bell to receive more videos like that. Out of here. Holla.
Fuck it! Do it live! I'll write it and we'll do it live!
Okay. Ready?
Fucking thing sucks! We'll do it live.
Okay.